everybody. Welcome to the Trading Market Technicals morning call video for Tuesday, November the 12th. Quiet day, modest gains. Dow Jones up 21, Nasdaq up a half a point, S&P up a little over a point, and the Russell up $1.50 due to the Veterans Day holiday. Banks and the bond market was closed, and that's why you saw the market literally just within a couple of point range, just stood there all pretty much most of the day. Very, very quiet, nothing going on. And I'm not going to just going to show you a couple little things here. Really not much happening here. You can see here though in the E-mini S&P contract, the 5-minute chart, we did really much of nothing, pretty much all day yesterday. Now there are some pockets of volatility, but you had to be coming across your screen here in order to participate in it. But I just want to show you a couple of indicators. We went through a long video yesterday. Our indicators. A good portion of them are all on sell signals at the moment. There is a couple, as the tick, as you can see here, which I did not show you yesterday, is still above zero. But as you can see here, just making lower lows and lower highs. And we really start breaking zero and holding below zero. That's when the tick is going to give the bulls some problems. But as of right now, just kind of holding above zero, barely, but still holding above zero. Here's the New York Stock Exchange 52-week highs, making lower lows and lower highs. Has not participated in this recent rally up here. This is another concern. I did not show you this yesterday, but I wanted to get this out to you early this morning. And again, markets are at the highs, at all-time highs, and the New York Stock Exchange 52-week highs are not. So if the market stocks are not making 52-week highs, what is going to push stocks higher, right? So that's something you have to think about. The CBOE, the put-call ratio, closed bullish at 82, down about 4 cents. So extreme complacency continues to build on the long side. Here's the VIX. Lastly is the VIX here. As you can see, we broke down again, down 37 cents. So the VIX is going to come into all-time lows again, and that's a word of caution. Every time we get to these areas, we pop. As you can see here, we did breach this, but we end up running higher. Here we ran up higher as well, so we could chop around and then flush, and then that would be probably a good sign that the markets are probably done going up to the upside. I do see some volatility coming into play. Could be any day, any moment. The reason why we can't really pick on what day and what time is because the markets have stalled at these levels. I'll show that to you in the chart segment. And what happens when the markets stall, not that it's a bullish or bearish thing, but if the markets do not continue to start making its move shortly, you're going to have a downside break. That's usually what happens. So that's why I said a word of caution, putting a lot of long trades on. We're at the highs here. And, you know, I heard listening to CNBC and Fox Business News and, you know, what have you, they all say, oh, you know, is the retail trader not in the market? Well, they've been in the market. We've had mutual fund inflows, its highest in the last several months, back-to-back in a row. So I don't know where they're getting their data from. But as of right now, retail investors are buying at the highs here. So that's another word of caution that I'd like to see as a contrarian indicator. Okay, WTI, crude oil. As you can see, this is the crude oil spot price and the day. As you can see here, this is actually getting to be a good spot. Maybe, just maybe, if we could take out yesterday's high and the previous day's high. Easy to manage. It is a counter trend trade, right? We are making lower lows and lower highs, so I wouldn't get too aggressive to the long side, but for a bounce trade, you might be able to get that 20 or even that 200 that's up above here, with your stops below this little cluster or this below this little wick here of this candlestick. But again, it's only for a trade. If you're not used to trading something like this, then I would just stay away. Okay, let's just quickly go into the chart pattern. Really, nothing has happened yesterday, guys. We are hanging around at the upper end of the range. 1781, 82 is going to be the next target, which would be the 1618% Fibonacci retracement. Okay, as you can see, we are extremely overextended. We do have the 20, the 50, the 200, and we have two uptrend channels, lines from the November 2012 lows, okay? So there's plenty and plenty of support. If you even went down to here at 1668, this would still be in a bull market, okay? We were still making lower lows and lower highs. As long as we don't take this pivotal low out of 1639 on a closing basis, then I think you'd have to re-examine it. But we are absolutely in a bull market at the moment, with a lot of cracks in the wall, that's for sure. but I would be very cautious here at these levels. We're going to need a catalyst for this market to move either higher and or lower. Right now, that's what the markets are waiting for. I think that again, that doesn't matter what I think, but I think the non-farm payroll numbers were totally read wrong, and I think that the markets will digest those numbers eventually and start to take profits here. It's just a matter of time. The thing is, timing is the biggest part, and I personally am not looking to challenge the market. I'm just looking to go with the flow. So we look today, tomorrow, in the coming days to see which way this market is going to be headed. And obviously it's a 50-50 shot here. Nobody would tell you we're going up, we're going down. I'd rather just say, look, I'm sitting tight. We start losing the 1747 would really be the key here. 1747, we lose this number. And if you really want to, this number, this pivotal low of 1736 would really seal the fate of if any upside momentum in the minis anyway. We're talking about the E-mini contract here. So 1736, 1747 would get us a little excited. 1736 would actually seal the fate that at least we're up and we have some sort of a local top in place that we can trade that top to the downside. Okay, and remember, look at the moving averages; they're all still pointing higher. So just keep that in mind. It will not get too aggressively short. But for the day or 2 days, if the market does start to break down, yes, you can absolutely do that as long as you identify your risk. USO. Same thing here. 3440, call it. A break above that on the closing base. I think you can actually try to grab some of that upside resistance at the 3530, 3550 area. That would probably be your first area of resistance going in if you're counter trend trading the USO. Now, the gold, again, I have no trade in gold. I like to see gold up much higher here. Or I'd be a big buyer or a better buyer way down below about the 1100 in the gold contract. Here is, you can't even see it actually. This little area here, this is yesterday's movement in the spiders, literally 2 points. Well, equivalent to 2 points in the future. But you can see here, not one bit of movement. So we had the down day on Thursday. We took 2/3 of it back, and we did nothing yesterday at all. Up a point yesterday in the spiders. So really not much to really talk about here. However, remember, the market's not going to stay like this forever. So another couple of days of people coming back, traders coming back to the desk today. And you're going to have a little bit of movement. I do suspect we're going to get some movement in the next coming days. Here's IWM, same thing. A little bit, ticked a little bit higher. But again, nothing really to write home about. Here's the diamonds testing the 2012 lows, as you can see here. So we're just back testing here. And transports, again, trying to recover from this loss from Wednesday and Thursday. We do have a little bit of a pullback, but again, it's really going to see what crude oil does. If crude oil starts to break to the upside, then you're going to put some pressure on the transportation sector. And here's the XLF. Interest rates are good. Rising interest rates are good for the banks. That's why the banks rallied on Friday. Big move up with all the banks. But again, we paused again. So we're back at challenging these highs. So we're going to need some sort of a catalyst or some sort of a push here. And I think that's going to happen. Usually the markets are a forecasting mechanism here to me. I look at and say, well, when something's moving and something pauses, it's just a matter of time before something breaks to the upside end or to the downside. Now, it's really nothing actionable. You can't, unfortunately, you have to let the market tell which direction it wants to go, and then that's where you would start basing your trading on. Here is Goldman Sachs. Again, I still like Goldman. It's been a while here, but if you bought either the calls or you bought the stock right up in here, you're still up making some money. But again, really needs to get going here. Take out the 164 for 170 test of the upper end of the range on the highs here. And again, Apple really not doing much. No trade in Apple here. I like to see Apple get back to at least a 50-day moving average, and then we would reevaluate Apple. The IGN networking sector of the technology, still okay. Back testing here, like a little flag. Now, if this is going to continue to work, the head and shoulders, we need a reversal just about coming any day now. So, going to need some sort of movement to the downside in the market. We're down about 2.5 handles. Really, really quiet overnight session. And lastly is the Qs here. Absolutely nothing. Small little doji candle from Friday's big move up. So, Just a quick little recap. We are very, very quiet coming off of the Veterans Day holiday, to be expected. We do have the banks and, of course, the bond market returning today, so there should be a pickup in volatility and some movement. So the market indicators are pointing lower. The market is staying up. Something's got to give, and I would be waiting and be patiently waiting with the gun loaded to see which direction this market's going ahead. If the market does decide to move lower, it's going to be fast. So if that happens, I'd be looking to get ready for any short sales that you're looking at. Get ready for markets to make a move. And again, keep your palate dry, because if you're in a bunch of trades, and sometimes the vision gets skewed. So I would like to, me personally, just pick a nibble at a few longs if that's what you want to do. But again, get ready to get out if, in fact, the market does sell off. Because if the market does sell off, it's going to take everything down with it. There's a lot of buyers up at these areas thinking the market's going to go much higher before year end. But it can do that. But you have to understand, if the market does flush once, you want to ride that flush all the way down. You really don't know what can happen during the market sell-off. We could get a shallow pullback again, and then the market gets bid up, or the markets can sell off too hard, running too fast, that everybody wants to get out, and then you just start a chain reaction. So again, something just to keep in mind. Okay, don't get too aggressively long here at the moment. All right, guys, that's really about it. A very short video. I apologize, but we have really nothing to talk about. But I do suspect markets are starting to move here. We are coming into some seasonal strength, but there are pockets of weakness between now and between now and Thanksgiving, and then right after Thanksgiving, the markets usually start to grind higher and get into that Santa Claus rally. And my suspicion is that we are at these lofty levels. We've been trading higher since October 9th. Literally about 24 trading days, up about 22 of the 24 trading days. I would not doubt it if the Santa Claus rally has come and now gone. But again, that's just my assessment. I will not trade off of that. It's just an idea, something to think about. Remember when I started looking at the Traders Almanac, we had 8 times we were at market highs during this time of this seasonal strength of year. And during the 8 times, markets did not rally, because that rally happened sooner rather than later, right? Just keep that in mind. All right, guys, have a great day. We'll speak to you tomorrow. Take care.